Business owner's investment strategy, not what your advisor says. Objective: teach investment hierarchy for entrepreneurs. Download investment planning worksheet. Keywords: business owner investments, entrepreneur financial planning, small business retirement. Contrarian hook: traditional advice versus reality. Just put it in index funds. That's what most financial advisors tell business owners. But here's why that advice could be costing you thousands in missed opportunities. I'm Presley, and today I'm sharing the investment strategy that actually makes sense for entrepreneurs, because your financial situation is completely different from someone with a regular paycheck. Preview of investment hierarchy pyramid. In the next 8 minutes, you'll learn the business owner's investment hierarchy, why your business is an investment, and the specific accounts and strategies that maximize your wealth building as an entrepreneur. Problem statement with statistics. Here's the issue. Traditional investment advice assumes steady income, predictable cash flow, and employer benefits. But as a business owner, your income probably looks like a roller coaster, not a straight line. Comparison chart: employee versus entrepreneur finances. Employees get steady paychecks. Employer 401k matching. Predictable tax situations. Health insurance benefits. Entrepreneurs have irregular income. No employer matching. Complex tax situations. Self-funded benefits. Same advice doesn't work for different situations. Investment hierarchy pyramid, 4 levels. Here's the business owner's investment hierarchy. Think of it as a pyramid you build from the bottom up. Level 1, Foundation, Business Emergency Fund. Before investing anywhere else, you need 3 to 6 months of business expenses in a high-yield savings account. Not personal expenses, business expenses. Calculator showing business expense calculation. Here's how to calculate this. Add up your monthly fixed costs: rent, payroll, software, insurance, loan payments. Multiply by 4. That's your target emergency fund. Why business expenses instead of personal? Because if your business fails, your personal finances fail too. This fund keeps your business alive during slow periods or economic downturns. Level 2, Tax Advantage Business Retirement. This is where most business owners have a huge advantage over employees, but most don't know it. Retirement Account Comparison Chart. SEP IRA, contribute up to 25% of your business income, maximum $66,000 per year. Perfect if you have no employees or want to contribute the same percentage for everyone. Solo 401k, if it's just you, or you and your spouse, you can contribute up to $66,000 as an employee plus up to 25% of your business income as the employer. Total possible contribution, over $100,000 annually. Tax savings calculation example. Example, if you're in the 24% tax bracket and contribute $50,000 to a SEP IRA, you save $12,000 in taxes immediately. That's a guaranteed 24% return on day one. Level 3, Business Growth Investments. Here's where it gets interesting. Your business might be your best investment. ROI comparison chart. Stock market average, 7 to 10% annually. Real estate average, 8 to 12% annually. Your business, often 20 to 50% plus when invested strategically. Business investment examples. Smart business investments. Marketing that generates measurable ROI. Equipment that increases capacity or efficiency. Training that adds high-value services. Systems that reduce your time involvement. Case study graphic. Case study: Maria spent $5,000 on Facebook advertising training. Result: she increased monthly revenue by $3,000. That's a 60% annual return on her investment, not including future growth. Level 4, Diversified wealth building. Only after the first 3 levels are solid should you focus on traditional investments. Diversification pie chart. For business owners, I recommend 30 to 40% low-cost index funds, your boring, steady growth. 20 to 30% real estate, rights or rental properties. 20 to 30% business and business-related investments. 10 to 20% alternative investments, precious metals, commodities. Important distinction graphic. Key point: your business should be considered part of your investment portfolio. If 80% of your wealth is tied up in your business, you're not diversified, you're concentrated. Action plan checklist. Your implementation plan. Month 1. Build business emergency fund to 2 months expenses. Month 2. Open SEP IRA or solo 401k. Month 3. Increase emergency fund to 4 months. Month 4. Start regular retirement contributions. Months 5 to 6. Evaluate business growth investments. Month 7 plus. Begin diversified investing. Common mistakes section. 3 mistakes to avoid. Mistake number 1. Investing in the stock market before you have emergency funds. You'll end up selling investments at bad times to cover business expenses. Mistake number 2. Ignoring retirement contributions because the business is my retirement. What if you can't sell it for what you think it's worth? Mistake number 3. Not tracking ROI on business investments. If you can't measure it, you can't improve it. Advanced strategy sidebar. Advanced strategy. The barbell approach. Keep most of your money in safe, predictable investments, emergency funds, retirement accounts, but allocate 10 to 20% to high-risk, high-reward opportunities, new business ventures. Startup investments, cryptocurrency. This lets you sleep well at night while still participating in potential windfall opportunities. Call to action graphic. I've created a free investment planning worksheet that walks you through calculating your emergency fund target, retirement contribution limits, and helps you prioritize your investment strategy. Download it free in the description below. Engagement question. Question for you. What percentage of your wealth is currently tied up in your business? Are you over-concentrated, or have you started diversifying? Let me know in the comments. I'm curious about the range across different business types. Visual cue. Subscribe reminder.